on setting stop losses and take profit levels. Now, this subject as a whole is quite broad in the sense that it will always differ on the type of trader that you are. Okay, whether you're a scalper, whether you're a day trader, or whether you're a long-term trader, your take profit and stop levels will differ. Okay, but I'll try and cover the most generic formats and the different types of traders and how they would utilize their stop levels and their TP levels and the tools that you can use on TradingView to kind of help you set certain levels when you are trading. Okay, so let's begin with the simple one, and I'm beginning on Euro Aussie once again just to kind of familiarize you with this market and to show you how you would kind of set your TPs and stop levels if you were trading this market. Now, say a particular type of trader is just wanting to trade this range. Okay, now if they want to trade this range, the smart trader will sell high and buy low. Okay, if they want to play the range. Okay, so say for example, and this is why the entry points are so important, because your stops can be smaller if you are catching the right entry point. So say for example, the trader actually waited for a fake out of this range and then it came back into this range, and you are then executing that trade over there. Depending on how risky you want to be, you could then place your stop, say just above this level over here, which would be just over there. So that's how you would set your stop loss, because if it now breaks above this level once again, that would invalidate that trade, and it would show that the breakout actually wasn't a fake out, it's a genuine breakout, and the market is now potentially going to move in an uptrend. Okay, so the TP level on this trade in particular might be the bottom of this range, might be below that range, might be halfway through this range. It all depends on the type of trader you are. Now, of course, all you want to focus on is that your risk reward ratio remains at least above 1. Now, we do tell our students and teach our students to at least keep their risk reward levels above 1.5 or 2, and ideally you want to keep them above 3, because what that helps you to do is you can actually lose more trades than you win, but you can still remain profitable. It all comes down to risk and reward. So that's one way of calculating your stop and TP levels. Now, similarly, like I said, it's so important to get a good entry point, because say for example, someone entered at the middle of this range. Okay, you are kind of somewhat gambling, because your stop levels would have to be again above this level, and as you can see now, even if you're trading at the bottom of this range to set your TP at the bottom of this range, the risk reward ratio goes below 1, and therefore this is not a sensible trade to be taken. So similarly, if you wanted to kind of play this in the opposite way and you wanted to kind of buy this market and play the range to the upside, the ideal move obviously would be to buy low on this range, so you can have your stop in a sensible position, and then what you can do is you can set your TP at the top of either at the top of this range or even at the middle of this range, and you'd still have a risk reward ratio of nearly 2. Now, another way to kind of trade this market, okay, would be to use the Fibonacci, as Matt mentioned in the earlier video. So say for example, we see this move happening over here, and the trader is actually anticipating a move to the downside. Now, what they would do is draw on this fib over here. Okay, they draw on that fib over here. You can see the A, the B, and then the C retracement fits perfectly and rejects off the 61.8 level. So their entry could be around this region over here, with the stops going again above the high of the range. And the TP level, when you use the fib, you can use the minus 0.27 level as the next swing point for you to set your TP level at. So again, this will translate to a trade or a risk reward ratio of at least 2.4, which again would be a sensible trade to take. So that kind of covers the TP levels and the stop levels that a typical intraday trader or a day trader would take. Now let's have a look at a shorter time trader or a scalper. And for that, we need to drill into the smaller time frame. So say the 15-minute time frame. Okay, and similar kind of concept would apply, only that the stops would be a little bit smaller and the TP levels would definitely be smaller too. So let me just try and zoom in so you guys can see this over here. Right. So a scalper in this case, what they might do is they might want to go long of this range, and what they might do is use the 15-minute time frame to identify, say, a bullish engulfing, which can signal a reversal on this market. And since it's at the bottom of this range, it would be a sensible move to take and a worthwhile kind of trade to take. So what they might do is go long of this market over here and place the stops just below this. Okay, and what they might do is just, place their TP level at this level here, because it's clearly a support / resistance level over here, and that would be a 2.3 risk reward, which would be a sensible trade for a scalper to take. So again, that is how a scalper would set their TPs and stop levels. Now finally, what we're going to look at is a longer term trader. Okay, so someone that might be trading over a couple of days or even a week or months down the line. So again, we're going to look at how you would place the stops and TPs on a bigger time frame. So for this, we're going to move on to the 4-hour time frame. Now, similar kind of principles would apply even on the bigger time frames. Okay, so for example, if someone was using the fib again on this higher time frame, what they would do is select the high point, okay, the low point of the swing, and there we can see a perfect 61.8 fib rejection once again. And what they would do is execute their trade on the 61.8, okay, and put their stops above, probably over this level, over the 61.8 level, or maybe even the 78, okay, and then they would extend this TP level all the way down to the 0.27 level. Now obviously they'll be holding this trade for a long time, but the risk reward ratio does match up quite nicely, and they'll have a risk reward ratio of about 4.8 if they were to trade this market over here. So hopefully that kind of covers how to kind of set your stops and your TP levels. Like I said, there's going to be very different types of traders, and it depends on the type of trader that you are to kind of identify where your stops and where your TP levels would go. However, the main kind of rule is to kind of keep your risk reward ratios at least above 1, ideally above 2, to kind of make sure that you are going to be a profitable trader